Welcome to Markets Now. I'm Michelle Rourke with Brad Kooima, Varilek. Well, we've got just about everything lower here in the early portion of this session, except for the cattle market. Brad, thanks for joining us. And the cattle market had kind of a tough week again last week, but we're back up this morning. Do you think we can hold the gains, and beyond that, can we stabilize?
Well, this is a little whippy. How about that? I think thanks for having me on. I think it's a good call switching to Mondays, right? We can talk on an up day, right?
Yeah.
Sounds good to me. So I think today starts a little bit with Friday. We had a big time risk off day for most of the day Friday, and then late in the day you saw a nice comeback, and I think the market was terrifically overdone. I mean, here's a market. Some of these months broke $14 on partly on the bird flu scare, partly on the fear of the escalating tensions in the Mideast.
Right.
And a softer cash market. We lost $3 2 weeks in a row on the cash. So that's the nature of the beast here. So I think maybe, coming in this morning, it was like, well, do we really have to have June cattle at 172 when the north is 185? And you prompted this, short covering bounce is what it feels to me like. Now, a lot of the sell-off was long liquidation. You got this open interest down to, I should have had this, I apologize, but I think it's the second lowest since 2016. So the funds have blown all the way back out. It's too bad. We need the funds. We need that long speculator. We'll get him back, but it'll take a little rebuilding now, I think, of the charts. So we'll see. I kind of watching this 176 and a quarter to 176.40 area on the Junes. It'd be my first marker of maybe it's safe to be a little more friendly. That's the 100-day, and that's the 38%. We got close. We got within about 70, 80 points of it this morning. So she's whippy. Wow, it's volatile, isn't it?
So we need to get above that, but close above that 100-day moving average.
Well, I guess I think so. I don't know. This is okay. Just me being me here. I come in this morning thinking, you know what? It's time to not be so bearish. We're too steep a discount. The north does not have the cattle. Nobody's going to make me think that. I'm sitting in the north, okay? I know what the show list is here. I know what the show lists are like in northeast Nebraska. And as one of my greatest friends in this business used to say, the beginning and the end of all markets start in Iowa, talking about cattle markets. And so when we're this nice and current up here, that has a tendency to skew my thinking a little bit because I'm still a fundamentalist at heart. So I thought, well, I think it's time to take off the foot off the gas a little of this bear bus that everybody's been driving. But of course, 300 higher right away this morning kind of takes the fun out of it. So we'll see. I'm glad to see we're higher. I'm glad to see that hopefully we've got a little quieting of the bird flu talk, although I doubt that it's gone away. And of course, this whole Mideast thing is going to be on the back of some of the traders' mind too.
Yeah, and like you said, the futures got way overdone in terms of bearish reaction there. The cash trade, though, as you point out, has held together very nicely. What do you think we're going to do in terms of cash this week?
Well, the cash is king statement's been heard a lot around here lately. I think, and I would note that, pardon me, that cash certainly seems to be king in terms of the feeder cattle trade too. Wow. They just don't break very much at all. So the South ended up at 182, a couple dollars above April futures. We traded cattle earlier than normal this week. Wednesday, we got 185 basically for most of the show list here to a couple of different packers, one major, one regional. I think a guy could have done that on time on Friday yet. Wednesday, Thursday, 185. But then Thursday before the big break, I guess. So what's it going to be this week? I was going to be bold with you this morning and say I thought that cash would be closer to steady, which would have been swimming against the current. But now with the big up on the futures, of course, I would have more confidence in guessing that it's going to be closer to steady. And the north will be a couple, three higher than the south. And I would guess that the south would be a little bit higher here than wherever April cattle end up on the day they trade. So April's trading, about 180 and a half now. It's there's still some of this lingering issues in the marketplace. The box beef is not in terrific shape. We're still in this kind of this limbo period here where we're really not into that spring demand season, which I would say is 2 to 3 weeks ahead of Mother's Day. And that's a little bit off yet. And you still got this some of the macro stuff that's still out there.
Plus, do we need to talk about the weights? That's still, a headwind.
The weights are disgusting. It seems to be incongruous to what the north is like, Michelle, because we feel more current here, but the weather has been perfect this spring. So some of this weight thing is based on performance, and it's not a one-off either, because the weight thing is also part of the story on the choice select spread. Now it's widened out a little bit, but I mean, last week it was almost even money. That tells me that there's plenty of choice in the mix, and choice is created by days. Days on feed. So, that part of the market structure is unfortunately is not supportive.
All right, let me ask you about the hog market. Commitment of Traders report showed that the funds actually added to their long position in the hogs as of last Tuesday, but that I think was before we had that big bearish key reversal, and now we just keep kind of taking air out of this market. Top is in, you think?
He who buys what isn't his and buys them back, sells them back, or goes to prison. You ever heard that one? There's an old one.
I haven't.
Yeah.
That's one I need to add to your book. I'm writing a book about your
We need to write a book.
market statement.
Yeah. Commodity sayings that nobody cares and only about 3 of us understand what they mean. Yeah. So now it would appear is that now you've got the fund group trapped at the top. Big outside day, classic way for a hog to make a hog market to make a top. Big outside day swinger. And just, like now you see me, now you don't kind of a trade, big time follow through. So I suppose now we're going to, take these funds back. Now we're back to kind of areas where this thing started from, the June hogs. I don't know, this 100 to 101 area. I was hoping maybe we're flirting with the 40-day. I don't know. I would say season highs are probably early and probably in. I don't know that we got to break a whole lot more than this, but you're probably going to see a few more fund liquidation here at this rate.
Yeah. What about the grains, Brad? Of course, Friday, it looked like we were getting fund short covering activity ahead of a weekend where there, as you pointed out, were concerns about war in the Middle East. We've also had some inflationary fears there as well. Today, we're back down. Is that just farmers selling, or is that weather?
I thought that maybe on Friday, inflation, war fear, a lot of that stuff, what was in the market. And now this morning, it seems like now we don't care so much about that. The crude oil, throw that into the mix. So then I just pulled up a July corn chart. The market's the same place it's been for 3 weeks, and it's where it was the 1st of March. So we haven't accomplished much other than to just basically get ourselves off of the lows. We had a bit of a seasonal rally. Usually I'd fall back on that idea, right? March 1 to the 1st of May, but yeah, we're getting a little long in the tooth there. It's the middle of April, so we're just about losing that window of the what if planting season. And I think, as you mentioned, the weather, I think that the what if now, at least this morning for the trader, is shifted to, well, looks pretty good. Getting a little moisture, getting an early start. Got to cut a bit of corn in the southern half of the Corn Belt already. Early planting is usually viewed as being a little bit bearish because of increased yield potential. So I think we're back to trading maybe the weather stuff, which I guess in all honesty has to probably be interpreted as being a little bit negative. Now, if this rain event starts and keeps up, it only takes about 15 minutes for a commodity trader to switch from being it's too dry to it's too wet, right? So I do think that the bean deal doesn't have a lot to hang on to right now in terms of fundamentals. The corn thing, the encouragement there to me would be basis and ethanol. The margin for ethanol guys are, if it's not a record, it's very close to it. The demand around here, and we've got all kinds of ethanol plants up here, is excellent for corn. They want to grind at 1,000,000 miles an hour if they can. So I'm hoping that that'll support this corn thing a little bit as we move towards springtime. But you're going to need some kind of weather aberration to get us to go anywhere because we've got plenty of it around.
Yeah, and just quick, we have had some flash sales the last week or so, but demand just isn't good enough yet to chew through these bigger supplies. Is that the problem?
For sure, particularly the supply of wheat and corn, it takes a little more than just a little bit here and there. Now, maybe we can get on the backside, obviously, of when South America is such a direct competitor for the soy stuff. But we've got a lot of work to do if you could somehow get November beans toward $12 to $12.40, I'd surely be a seller there.
Okay.
20-cent rally on the corn's a lot. And so that's kind of what my limited expectations would be on that market.
Yeah, we're going to either need big demand or some big weather problem. And right now, I don't see much of either of those. So.
Neither do I.
All right. Thanks for joining us, Brad Kooima with Kooima Varilek. That is Markets Now.